It's not just our markets. All around the globe, you can see a fantastic rally play out. Let's talk a little bit more about what's fueling sentiment across the globe, and largely the $2 trillion US stimulus being approved has been one of the key triggers. Peter Dixon, senior economist at Commerzbank, now joining in on the phone line from London. Peter, hi there. Good to have you on board. Let's just talk about how there has been quite a reversal in sentiment across the globe. What have you made of this US stimulus, $2 trillion, and that has been approved by the Senate? That seems to have really taken the overall global markets in a tizzy.
It's good that governments are stepping up to the plate finally. And as you said, it has, I think, put a floor under equity markets for now, following the ongoing collapse that we've seen over the past 2 to 3 weeks. It was always going to require some form of government intervention to put a floor under these markets. The US has finally stepped up to the plate. That's a good thing. But of course, what we now have to reckon with is the damage to the economy and to corporate earnings that's likely to follow from the shutdowns that we're seeing across the globe. So whilst it's good news that markets have apparently rebounded, we don't know whether it's sustainable, and I think many investors are still remaining very cautious at the moment.
Well, is that an approach as well that you're adopting, Peter, at a time like this, that you're not really reading into the kind of rebound that we've seen? Do you think that, and give us a sense as to, whether or not you believe that we will see some sort of a follow through, or that you believe that this kind of a move is sort of just temporary in nature, a flash in the pan?
Yeah, I mean, it's always the case, isn't it, that when you see a sharp fall and a sharp rally, the temptation is to get involved and trade up. But, my sense is that this is not going to be sustainable. We might see a day or two more of decent rally, in which case, great, we'll accept that. But thereafter, I think the hard work begins. So, I would say to clients, if you are brave enough to get in at the bottom, you might get some upside in the very short term, but it's not a position I'd want to hold for a long time. And, I would certainly stay out for now until I have a clearer indication of, what damage has been done to the overall economy.
Yeah, speaking of damage to the overall economy, Peter, give us a sense as to how, you see these coronavirus-related shutdowns across businesses really impacting global sentiment, because there was talk just a few weeks ago of, a large global recession looming in sight, and a lot of experts saying that that was absolutely inevitable. Are you jumping on the bandwagon as well? Do you endorse that view?
Oh, yes. I mean, given the extent of the shock that we're going to see to US data, to European data, and I guess, to Indian data as well, given the shutdown there, there is going to be a very big hit to global growth. Without putting too much precision on the numbers, I think if we get global growth this year of around about 1%, that's significantly better than we saw in 2009, but it would still be consistent with a global recession. And it's also based on the assumption that we will see some form of rebound in the second half of the year. That, of course, is an assumption, not a given fact. So, obviously there are significant downside risks, I think, to the situation with regard to global growth.
Mm-hmm. Given that it seems, Peter, that the US seems to have gone all out in terms of its stimulus and the kind of packages that it's doling out, do you think now that, they have taken all the kind of recourse that they possibly can from an economic standpoint, and that's sort of it? Or is it that investors such as you, etc., are expecting some more firepower from the US government in terms of, fiscal or monetary sort of stimulus?
I think that's it for now from the US, and indeed from most industrialized economies. But given that they have basically decided that they're going to use fiscal instruments rather than simply monetary instruments, theoretically their firepower is unlimited. So if more needs to be done, they can do it. But I think most investors are taking the view, look, this is great. This is a good package. Hopefully it will produce some significant positive effect on the economy. If not now, then certainly in the longer term. So I think most investors will probably take the view that, this is enough for now, and let's play it from here.
Right, Peter, let you go on that note. Thanks much for taking time out and joining in, giving us a sense of what you've made of this package being approved in the US Senate, as well as the kind of rally that we're seeing across the globe.